Good morning. So here we go, running in place again, like a sprinter. Markets are up here, rejoicing that I guess things are beginning to open up, phase one, as it's called. And that's the good news. Now, whether this market can get out of this trading range, we shall see. I think by the end of this week, I think you have to by the end of this week. Hopefully we don't get another week of chopping sideways. As you can see, futures are coming up toward the top of the range here. And different markets to different degrees have violated their uptrends on the daily time frame. Some actually moved to downtrends last week with the move to the downside. But the markets are up here this morning. We'll see how far they go. And so it appears to me that the majority of whatever the gains may be today have been had here pre-market. You can see the rally that started right here around 7:30. Acceleration to the upside. And this has the look of, on a short-term basis anyway, on a 5-minute chart, a breakout failure in the making. A move below here, we'll start to get a little bit of selling coming in. Anyway, you can see the weekly chart has just been going nowhere for weeks. And its ability to stand up to the bars that form like this topping tail bar, that's certainly a positive. And last week, things looked a bit dire toward the end of the week. And then Thursday, buyers came in again at support. You can see right here, top of the range, bottom of the range. Buyers came in last Thursday. Friday was a go nowhere day. And now with the reopening that's occurring today, the markets are up and we'll again see how far they go. NASDAQ still in an uptrend. And so now the question is, can it get through here? Is this going to be an M top? As it's been going nowhere as well last couple of weeks. And we'll see as the pattern develops, we'll see if the NASDAQ can get through the highs here or not. So if they can, well, then the expectation is that they should push up to the old high. And since this has been the strongest, that would be certainly a possibility. We've got, technology having been led the way and internet, and the internet ETF, DN, is already there. As you can see, it's rallied. It's right at the edge of where it broke down from in February. The Dow has been the weakest, and this is joining the party here today. And as you can see, this head and shoulders kind of top is formed here. And so we'll see if this can get through this area here and negate that. It did trade under these lows last week. And as I said, recovered on Thursday. And so now a deep retracement here puts this into question. But, like I say every day, this is the beginning of the day, and we'll have to see what this looks like. If this looks like a topping tail bar at 4 o'clock today, well, that's going to point to the downside. Whereas if it can hold on to its gains here at resistance, that's going to suggest moving up. Well, in any event, trading range continues pretty much everywhere. Let's clear this up. And the Russell, which has been weaker than the rest, it's having a good morning so far, but same story, trading range at lower levels, going sideways. Can't change, just the same thing. And we have the transports, which obviously have been the weakest. We'll see what they can do here today. They pushed under there and recovered like everything else did on Thursday. So what do these do by the end of today? Right? Some miracle, that they're going to get turned around, and airlines now, the airline stocks are going to go up, and the rails and so on and so forth. So we want to keep an eye on these and see if they push up here after the market opens, because this doesn't really update pre-market. Where is this at the end of the day? Down here? Is it here? So trading ranges are situations where they keep us guessing as to, are they going to break out? Are they going to break down? And of course, we look at higher time frames. Here we got the weekly is in a downtrend, and that supports that it's going to go down. And that's the same story that we have pretty much everywhere. We've got this bad tick. This is not, we can look at SSO. In any event, you can see the downtrend there. And let's look at SSO because it wasn't, it didn't go down as deep as the spiders show. Just some bad data there. In any event, that's in a downtrend. You've got the Russell in a downtrend. You've got the Qs in a sideways trend. The deep retracement suggests that it could get up to the high, and the internet stocks have. And you've got the Dow in a downtrend, but in a sideways trading range for weeks. So we're doing the same thing that we have over the last several weeks, is to wait and see which way this thing breaks one way or the other. So while the weekly suggests lower, it's just not happening yet. And so as this is moving up, 244, right at the top of where it fell from last week. And so we'll see if it holds on to that. We'll get to SPX. What's oil doing? Nice, right? Breaking out here, coming up into resistance. All right, look to the left there. And bonds, top of the range, moving back down. Actually didn't go down to the bottom of the range here, held and went back up, and now it's down because the markets are up, but just more of the same. A lot of going sideways. Gold, little selling pressure today as it comes up to the top of its range. Same story there. Overall, still bullish, sideways at resistance. And you can see where it's at here from those old highs, and it's just chopping sideways there for a while. So still looks okay. Just going to take some patience to see that how long it can consolidate here. Now what we want to see with this is that ideally, let's say the markets stay strong. Well, what we want to see is gold show some strength, meaning it could stay up at the top of the range while the market shows some strength and chop around here. And that would support that as the markets run out of steam, that this could then push back up to the old highs over here from 2012. And let me just, well, silver, that popped up very nicely. It's up here this morning. Let's go back to the weekly chart over here and pushing up. It's got some room to get back up in a kind of crazy pattern, falling like this so sharply. But you can see how on the weekly, the daily, it spent quite a bit of time repairing the damage and now pushing back up again. And SPX, let me back up here for a moment. And 213, close here. So we're going to have to wait a little bit, right, and see if sellers show up a little after the open. So since prices have pushed up like this, that should push the premiums, right, up on the calls with this gap up that's going to occur at the open. And then maybe after 5 or 15 minutes, if we see that faltering a call spread, right, the puts are probably not going to have much juice, but if there is something down here, I mean, this should be a safe level from last week's low, but up above 3,000, I think should be, a spread 3,000, 3,010 or whatever. should be safe for today. Well, that's what I'd be looking for. So as it comes up into this area, we can get some weakness, some selling coming in, maybe a breakout failure, and staying up at above the levels, 28.75. Like, yeah, 28.75. I think so. Will we have a red day? I have no idea, Paul. I just know what it is today, whether it's good. I mean, in the moment, what it's going to be at the end of the day, I don't know. I haven't figured that out to know what's going to happen at the end of the day, at the beginning of the day yet. Not before they start trading anyway. Well, it all depends. You're saying not red. I don't know. It's gapping up here. And so let's just say 30 minutes, if it's still up there, that's a plus. If it can hold on to the gains after 30 minutes of gapping up into this area of resistance, the longer it stays up there, the greater the probability that it won't be red. However, not to be a red day, closing below its opening price isn't necessarily a bad thing, meaning it's a significant gap. So as long as it doesn't fill the gap, we'll look at that as a positive, right? So it can close below its open and still be in the top of the range. It could even have a topping tail and still be in the top of the range. And that could just be profit taking from the size of the gap. So we'll see. If it fills the gap today, well, clearly that's going to be profit taking. It's going to be weakness. It's going to suggest breaking down through the bottom of the range. We'll just have to see how it unfolds. The internals gave us a sell right at the top here last Monday. And so a little bit of that is worked off, but right now we see it as more as being neutral, as coming down as it has. Sentiment came more toward neutral. It's still toward the top. And remember, this didn't push up to the static level. It pushed up into the lower band here. And you can see the breadth, the deterioration in the breadth, these lower highs. So, there was a lot of selling, on this day here, a lot of put buying, and that stabilized the markets. And so now we'll just see how it unfolds here today. This really isn't telling us a whole heck of a lot, because like I said, this has come down to this level. It really doesn't mean much. It's typical. I mean, it started at plus 100, and to go down here after the selling that we saw, which was pretty intense, as it came down at that time, and then this gap down and recovered. So overall, it's just a lot of running in place. We'll see what happens here at the end of the day as we gather more information. Let's say it holds 2,900. Okay, yeah, so right. This is kind of what I'm saying, the same thing. You want to associate numbers with it, but if it doesn't fill the gap and it holds 2,900, it's just at different degrees at this point, meaning you've got this big range, right? So we know that SSO, SPY is gapping up into this area. Now, if it closes below the open a red bar, but doesn't fill the gap and it's staying up here, that's a positive. Let's see what it's going to do. This thing may open and get crushed. I don't know. I just know that you had a reversal here at the bottom, toward the bottom of the range. Now it's at the top of the range. I know there are going to be sellers up there, and we're going to see how many sellers show up and what they're going to do. So here's the little breakout. It still hasn't violated this low here. So let's get this out here. A break below here, right? That's going to provide us with a reference point, pre-market reference point of resistance up at that level there. So this little breakout failure will bring in sellers. Because anybody that's long right now is saying, please hold, bring in some more buyers and let's, continue to push it higher. So this pattern tells us that Traders bought the continued strength as they did here, and it continued to go up. So if that fails, that's going to bring in some supply, and then we'll just have to see. This is a void. This is the void concept. So if it breaks there and then it breaks here, 29, 20-ish, there's nothing below. And that opens up the probability of a collapse back down to here. And there it is. All yours, Dan.
Good morning. Yeah, my take is we closed today red. But like you said, red just means under the opening print. So CNBC, you know, they got their headline, Dow is set to surge 600 points. And number one, it's already there. It's not set to surge. Look at the diamonds. It's already trading up. Let's look at a lot of junk movement today. Let's look at our opens. ACB right here, gapping up, little marijuana stock that we got into Friday. We have a nice short put spread and also a covered call, both of them looking great. Grub, we have a half lot of a put spread and, you know, flattish here. Netflix put spread. Some of these stay at home stocks I noticed are showing relative weakness. So we have a put spread here, the small gap down. Anything gapping down is relative weakness. But, you know, Netflix only gapping down $1 and change. $450 stock is fine. Pepsi, we have a Condor, Square, let's see, flattish, you got a downgrade, somebody said. We have a put spread, work. This is a stay-at-home stock, gapping down a little bit. We have a covered call and put spread. And Zoom, another stay-at-home stock. We have a put spread. We're short the 152.50, so still way the heck down here. So, you know, do I like that gap down? No, but nothing to do right now. That's it in the weekly. We only have 4 open positions in the swing letter, which is fine. I covered 2 of them. We have BMY covered call, flattish. Well, that's not true. It's up $1. So covered call is doing fine, and TMUS, we are long stock, and that's gapping up. And that one I might start looking at legging into a covered call. Let's see if we can sell the hundreds for Friday. Look at some gappers here. Not too many earnings. Play, this is, you know, garbage stock. We had a beautiful run on these garbage stocks when we had the beautiful 2, 3, 4 day breakout here. But now, even though they're gapping up, I don't have a pattern. I don't have any pattern. Remember DRI was one. We bought that breakout. That's gapping up $74, but it's gapping to nothing. Wow, look at this reverse head and shoulders down here. Wow, that was nice. The hotels, same things. They're gapping up, but no patterns. Hilton, a little 1, 2, 3 here, but it's a 1, 2, 3 in a downtrend. Marriott, same, little 1, 2, 3 in a downtrend. Cruise ships, gapping up, but no pattern. CCL, that's holding pre-market very well. I like the wide range bar consolidating in the upper part. That's a really nice 15-minute chart. Finally, Norwegian is the weakest. And, you know, Barron's reported a while back that this one has the least amount of cash. and the stock is underperforming. Jets here, you know, same. Airlines are gapping up here pre-market, but they're gapping up to do nothing. So I got no interest in these garbage stocks. NVAX up here again. I don't know if this had news or it's just up on the positive news. Myrna was up. Well, the market was up 300 Dow this morning, 300 and change. And then the CEO came out talking about their positive test one results, and that got the market rocking more. Hey, George, if you'll put your drop down, all panelists and attendees. George, just email Greg. I don't know how you're going to have a word with him unless you ask him a question. All right, so nothing to do with this. Myrna 87, but actually, you know, when something looks like this, so I used to call this the golf course exercise when I had class. That I want people to be able to verbally describe something in such specificity that you don't even need to look at a chart to make a decision. So if you're out there playing golf and your trading assistant calls you on the phone, here would be the exercise. Hey, Dan, I got this stock that's rallied from $10 to $67 in a very short amount of time. The weekly is climactic, and it's gapping up it's gapping up $20. What do you want to do? Short it. So I just have that bias. I mean, this one, it's a little different because it went sideways for 5 days, so that's very bullish. But percent-wise, visually, this thing's gapping way the heck up. Let's keep an eye on that to sell maybe a Friday call spread. Do you think, I mean, think about this. Okay, they came out with good news. The CEO's on the TV. It's up. The market's up. What do you think the risk of that going another $25 by Friday? Or do you think the good news is baked in? Could it go up on 25 more? Of course it can, but we aren't going to do anything unless we get a pattern. But that's on my list. Disney said they're gonna, I don't know, I didn't read the article, but they're opening something up. I don't know, they're opening something, but this one was on my long list. This was going to be a beautiful put spread candidate. On Friday, I looked, you know, nice reversal and support, but there was no juice. Now it's gapping up to 114. So, you know, gapping to that prior high, but that looks like a buy on a pullback, target 120. So that has room. ERI, I posted a text pre-market saying this is a gap breakout. This is a casino stock. So let's keep an eye on this as a long, and also a put spread. This is getting whacked under $30, but it's gap. There's nothing to do with that. With oil up, yeah, we need to scan the oil sector. FANG here, 41 and change. Do you remember that day? I know, Greg, you remember it. Remember when oil got whacked and we were talking about shorting I think it was like a $2 put in oil for like $1.50. It was like insanity. And then we said, well, okay, you know, there's risk. I don't want to do that, whatever. And then we said, all right, well, what if we could buy the $15 call? And I remember at the time, they were expensive. They were like $270 for way out of the money. But guess what? that would have been a home run, because now you're $15 in the money. So both of those trades would have been home runs. Put spreads on oil and a long call. Ludwig, okay, yeah, I like it. Yeah, it's a gap breakout. I like it. Yeah, that's a nice gapper. Thanks. PAGP. There's not enough volume. I like Oki better. There's you need more volume. PAA 880. Maybe 30-minute high, but I still like Oki better. And Oki has a nicer ring to it, Barrett, don't you think, than PAA? How do you, you can't say Pa versus Oki, because Oki makes you think of a nice wine. Oil, I don't get it stuck. Oil transport. But isn't that crazy that OI, you know what I'm thinking? OIL is not a tradable symbol. I wonder if the NYSE doesn't allow it. Maybe they don't give those letters away. But if I were an oil company, I sure would want those 3 letters. SE, big old gap up to all-time highs, nothing to do with it. PKE, gapping down, 90 bucks, no pattern. Boeing, in the Dow department, wow, there's 3 of them that are up huge here. But Boeing, it's a big old mess, but maybe a 30-minute high put spread. But I also have UNH up big. Although it's up big, there's no pattern. And then, wow, look at Home Depot up 8 bucks. Incredible. Loretta saying, can you say which ticker you're printing, please? Can you say what ticker you're printing? Yeah, talking about, yeah, no, I do give symbols every time. And then somebody else, how much do I need in my account to short put options? Well, if it's a naked put, like for example, let's say you shorted under Thursday's low, the 225s. It's a complicated formula. It depends how far out of the money, but the simple rule of thumb, 20% of the strike. If you do a put spread, like if you sell the 225 by the 220s, it's spread with less premium received. So let's say you take in 50 cents on a $5 wine. One contract represents 100 shares. So that would be $50 hits your account, and it would require $450 of buying power. But $50 divided by 450 is 11.1% return on capital. Barrett Home Depot, I mean, I'm doing absolutely nothing here until I see what the market's going to do with this big old gap. But if it retraces in a bullish manner, then I'm looking for put spreads. I mean, again, this tail is not real. I wish the software platforms would fix that on their own. That's so annoying. That bottoming tail is not real. It didn't print down there. But let's say it was real. That would be more bullish of a turn, because that was an intraday downside shakeout. All right, so I mean, I'm believe it or not on the bullish side here, and you've heard me say about 25 times, no, Ed, that's an incorrect statement, and let me elaborate. But you've heard me say some 20, 30 times, I can't explain this market strength, other than the Fed artificials putting it on life support. But I just shake my head, but the market don't care about me. Nor should it. So we're just going to trade the patterns. And if the pattern's saying higher, then we trade with it. Okay.